Hi, Peter. Thank you so much for accepting the interview.
Thank you.
Okay, so the first question, let's look back at this week's stock market. US equities have been pretty strong this week, despite mixed economic data, such as the labor market and also PCE inflation data. So what do you see as the main driver for the market's resilience?
Well, I think, part of it is the fact that the Fed is likely to cut 25 basis points. And I suspect that they're going to be somewhat more dovish than perhaps they have been in the past. And that's all due to the labor market, which, has been weakening. And there's been certainly signs of that through some of the private macro indicators that we've gotten. I think, the combination of the Fed and also the fact that traditionally December is usually a positive month for stocks. And so we're in that Christmas rally.
So which sectors are you watching most closely?
Well, I really don't, look at much sectors. I just look at the general trend, and the general trend is higher.
Why do you see that? Why do you think the general trend is higher?
Well, I think, we come off of a strong earnings season. The Fed is about to cut rates. So that just strengthens the general trend of the market that usually we encounter during this time of the year.
Besides U.S. equity prices, the metals and commodities have also been pretty firm this week, with gold jumping and copper strengthening. So what are these moves telling us about market sentiment?
Well, the metal markets are not really indicating what the market sentiment is, because actually they move in the opposite direction. It just happens to be that they're moving in the same direction at this time.
Right.
And the reason for that is that, both gold and silver are flashing a message that they have been flashing for a long time, that there are still serious geopolitical problems out there, that tariffs are inflationary, and that we're probably headed for some sort of foreign exchange crisis, and that crisis could emanate from the dollar-yen levels, which it involves the unwinding of the carry trade or reversing again. And so that's one of the flashes that the metal markets are signaling.
Yeah, because gold has outperformed most asset classes in 2025. Do you expect this momentum, the trend of going higher for gold, would continue into 2026?
Yes, I do. And, if you look at what happened with silver, silver has been, in percentage terms, has been outperforming. In fact, today we closed pretty much near the high level of the year. And gold is maybe 2% under the all-time record high. But I expect both of them to close the year on a solid note.
And what is your probably year-end target for gold price?
For this year?
Yeah, for 2025.
Oh, I think we're looking at maybe close to 4,500.
And next, I want to focus on the Federal Reserve's next week's meeting, right? So you said a 25 BPS rate cut is pretty much priced in by the market already. Why do you think so? And do you think it indicates a longer easing cycle?
Well, I think, if you look at the bets that the market has placed in, they're pretty close now to maybe 85%, something like that. If not 85, it's close to it. And so that's a good indication. And I think, some of the comments that we've gotten from some of the Fed governors, they've all, indicated that it's time to cut rates. And what they're doing here is they're not closing an eye, but they're sacrificing the sticky inflation that's still around due to tariffs,
Yeah.
and they're looking at the labor market, and the labor market is telling us that it's weak. And so to avoid the labor market worsening and having a greater negative impact on consumers' confidence and, above all, consumer spending, which, by the way, if you looked at the personal income and personal spending that came out today, we saw that personal income came out a little bit better than expected, but we saw spending up just 0.3%. That's a weak number. And so if the labor market worsens and you have more people that are out of work, for instance, yesterday we saw the Challenger Gray job cut report, and that showed that this year there were 1.1 million jobs that were lost. And if you notice, there isn't a week that doesn't go by that some company is announcing layoffs. So I think the Fed wants to address that.
Do you think for next year, 2026, the easing cycle would continue?
I think so. And I think the surprise that we're going to get in the FOMC communique is not that they cut by 25 basis points, but I think that they're going to sound a little bit more dovish than they have been in the past. And that means a good indication that we're probably looking at another 2 cuts totaling about 50 basis points, which would be a total between 25 and 26 of about 100 basis points.
100 BPS, yeah. Thank you so much for sharing with us your thoughts on the Federal Reserve. So right now, looking across all different stocks, bonds, commodities, and FX this week, what stood out to you the most, and what should investors pay specific attention to?
Well, I think investors, should have in their portfolios hedges, and the best hedge, in my opinion, is gold.
Right now, it's gold.
Yeah, as a hedge. So each portfolio should have a certain amount of money put into precious metals as a hedge. In terms of stocks, I think you have to stay in the stock market, but I also think you have to be careful because in 2026, I think sometime in the latter part of the first quarter or maybe the second quarter, we could be headed for a serious correction. Somewhere between 12, 15, maybe even 18, 20%.
Why do you think there will be a correction earlier next year?
Oh, I just think perhaps softer earnings growth in the first quarter due to a softer economy. And that means that valuations would be somewhat stretched out, and that would cause some sort of a pullback. But that doesn't mean that the yen is not going to, that the year 2026 is not going to end on the plus side either.
You also said that people should use gold as hedge, right?
Right.
So in terms of asset allocation, how much percent of gold or precious metals?
I think every portfolio should have a minimum of 5%,
5%.
and 10% standard.